China's main stock index closed at its lowest level in 8 years on Monday. The panic selling in China is contagious and spread to markets in Asia, Europe, and the United States. Despite the Chinese government injecting cash into the market, stocks hit a record low on Monday. The benchmark Shanghai Composite Index tumbled almost 8.5%, while the Shenzhen market was down nearly 8%. The major loss came one day after the government approved state pension fund investment in the stock market. Last month, stock markets in China saw an 8.48% drop. Other markets in Asia also stumbled on Monday. CCTV's Wang Yiqian reports.
Stocks tumbled on Monday across Asia. The mainland benchmark Shanghai Composite Index fell 8.5%. Bourses from Japan to South Korea were also hit hard. Japan's Nikkei dropped 4.6%, while South Korea's KOSPI lost 2.5%, as investors also worry over increased tension between South Korea and North Korea. Analysts attribute the poor performance to market concerns over the global economy.
As we all know, that the Greek issue could be another problem, and the Korean Peninsula crisis. As well know that because they're just negotiating now, and there may be some kind of wars. And last but not least is the PMI of China. As we all know that the PMI figure was very bad. And this is why the sentiment of the global investors are very bad.
Meanwhile, Hong Kong's Hang Seng Index fell by over 5%, while Australian shares also declined to their lowest level in 1.5 years. The steepest percentage drop since September 2011.
The government's priority probably is to stabilize sentiment and to stabilize expectations. However, at the same time, in the bigger picture, it's not only the equity market that is commanding the concerns. The recent push to make the currency more marketized by shifting the currency policy framework. They're dealing with the aftermath of that as well, because capital outflows are likely to be higher in July as a result. Now, to offset that, they'll also likely have to deliver more liquidity provisioning, which includes the possibility of a triple R cut.
Analysts say the sliding equities may have prompted investors to sell a riskier commodity and currency assets. Wang Yiqian, CCTV.